Hello students, welcome to FA SDMC channel. Please subscribe the channel and press the bell icon to get a notification about new updates. Today we are discussing about final accounts of sole trading concern. Final accounts means which are prepared at the final stage and which reflect the financial position of the business. A sole trading concern is a manufacturing unit. It is final accounts consist of manufacturing account, trading and profit and loss account, and the last is balance sheet. If a sole trading is concerned is a trading unit, it is final account consists of trading and profit and loss account as well as balance sheet. So the trading account for the period ending, first we are taking all the direct expenses, okay, which appears on the debit side of the trading account, all the direct income which appears on the credit side of the trading accounts. And this trading account we are preparing to know the gross profit as well as the gross loss. Okay, next we are preparing the profit and loss account for a particular period ending. So here all the debit side, which includes all indirect expenses like the revenue expenses, revenue received which comes on the credit side of profit and loss accounts, and these all expenses are recurring expenses, not a non-recurring expenses. Okay, for example, postages and telegrams, general charges, salaries, rent rates and taxes, which appears on the debit side of the profit and loss account, and the commissions, discount received, bad debts recovered, interest received. These are the revenue incomes which appears on the credit side of the profit and loss account. This profit and loss account we are preparing to know the net profit as well as net loss. If debit side exceeds over the credit side, it leads net loss. If credit side exceeds over the debit side, it leads net profit. The last one we are preparing the balance sheet. Balance sheet is a statement containing the assets and liability of a business on a particular date. Here we are exhibiting the all assets as well as liability of the firm. So the here asset contains sundry assets, a fixed asset as well as some outstanding income, prepaid expenses and all. Next, in liability side, all the liability items like bank overdraft, outstanding expenses, bills payable, okay, unsecured loans, capital and all, it comes under the liability side. So both sides must get tally. Okay, we'll go for problem number 1 first. We'll get 30 seconds to read out that problem. After that we can go for solution part. Hello students, we can go for the solution part of problem number 1, trading and profit and loss account for the year ending 31st December 2016. So first of all, we can go for the trading side. To opening stock 35,000, to purchases 1,50,000, less private purchase 500. So outer column 1,49,500. Okay, the private purchase means the property is purchased by the owner. It must be treated as a drawing. That's why it's deducting from the purchase. Next, direct expenses, wages 30,000, and in the credit side of trading account, by sales 2,50,000, by closing stock 35,000, by stock destroyed by fire. That means goods is destroyed by fire. If a goods is destroyed by fire, first of all we need to take the entry for occurrence of that incident, that is stock destroyed by fire account at R2 trading account 3,000. After that we need to calculate the gross profit, the 73,500, now the brought down to the profit and loss account. Next, go through the profit and loss account. To salary 5,500. Okay, that salary there is an adjustment. Go through the adjustment. 1 month salary was outstanding. Means in trial balance they given 11-month salary, 11 month salaries. Okay, 11 month salary 5,500. 1 month 500. Okay, 1 month 500 outstanding. It must be added. It's outstanding. Outer column 6,000. Repairs to plant and machinery. Repairs to plant and machinery. 1,500. Depreciation on plant and machinery 2,500. Okay, depreciation on building, both are depreciated, no need to deduct that amount from the asset under in balance sheet. Okay, depreciation of plant and machinery as well as depreciation of building is already depreciated. And bad debts 2,000 they given, and additional bad debts 2,000. Go to the adjustment they given here itself, additional bad debt. Okay, write off further bad debt 2,000. Then they ask with us to calculate reserve for doubtful debts. It must be added. So the calculation part of it. Debtors given in the trial balance 40,000. From that, we need to deduct further bad debt 2000. After that, 38,000. The rent of office included in the debtors. There's an adjustment. Rupees 1,200 paid as rent of the office were debited to the landlord account and were included in the list of the debtors. And it must be debited to the rent account. Instead of that, it is debited to the landlord account where it is included in the debtor list. First of all, we need to deduct that amount from the debtors because it is rent amount, not a debtors amount. Okay, so 1,200 it is deducting from the debtors. Now the exact data is 36,800. While we calculating the new reserve for doubtful debts, we need to know the exact data. So on that we need to calculate the new reserve. Okay, so 1,840 is the new reserve. Okay, so outer column 5,840. Rent 1,200 that we have calculated in the working notes. Loss by fire 3,000 is a loss for the firm, but we have received 2,500 as a compensation. Okay, 600 loss for us. Then before calculating the general manager, you can go for the commission of the general manager. We can go for the credit side of the profit and loss account. Discount received 4,000, commission 5,000. Now we need to go for calculating the general manager commission. See, in the adjustment they said general manager was to be given a commission at 10%. Commission at 10%. Okay, if the net profit after charging such commission. So we need to calculate the general manager commission here. First of all, we need to go for rough net profit of the firm, that is 60,860 into 10 by 110. That means they said that we need to calculate the net profit after charging such commission. So that net profit include that 10% commission of the general manager. First of all, we need to dig out that amount. Okay, 60,860 into 10 by 110. That's the formula. If that is a statement, if they ask that commission must be calculated after charging such commission, we need to apply the formula, that is rough net profit into 10 by 110. So look at the general manager commission 5,533. This is outstanding expenses because it's not paid to the manager. Okay, next to go through the net profit 55,327. We got an exact net profit. Now we can go for the balance sheet as on 31st December 2016. Cash 2,500, bills receivable 15,000, debtors 40,000, less additional bad debts 2,000, less rent include 1,200, 36,800. From that we need to deduct new reserve for doubtful debts 1,840. Means that amount won't come from the debtors in this year. Okay, that we need to deduct. We get the exact book value of debtor is 34,960. Closing stock 35,000, plant and machinery 25,000, building 80,000, interest outstanding 2,000, amount due from the insurer 2,400. Means that compensation amount is not yet received. If it is encashed, then we need to add that amount to the cash account, but it is not encashed, so it is yet to come from the insurance company to the firm. Take down as a outstanding income under asset side. Creditors 22,500, bills payable 8,000, overdraft 4,500, wages outstanding 2,000, salary outstanding 500. Now general manager commission with our outstanding expenses, because it's not yet paid to the general manager, wages, salary as well as general manager commissions, these are the outstanding expenses. It appears under liability side. Capital 1 lakh and net profit 55,327. Okay, outer column 1,55,327, less goods withdrawn by the proprietor. Means that goods is purchased by the proprietor, it must be treated as a drawing, so it must be deducting from the capital. Okay, 500. And income tax is paid by the owner, not by the firm. It's not pertaining to the firm, it's pertaining to the owner. It must be treated as a drawings because it is relating to the owner. So outer column will get the exact capital, how much after deduction of all this, 1,53,827. So both side 1,96,860. Now this balance sheet is gets tally. Okay. Students, if you have any doubts in this problem, please write to me through a comment box. Your comments are most welcome. Thank you. See you soon.